All of you, yeah, please, you all can take the front seats here. We will now have a short function to give away the APEX'26 VC Awards. Launched in 2007, the Awards for Private Equity Excellence, or APEX Awards for short, aim to recognize the leading private equity and venture capital investors of the previous calendar year. The shortlisting for the awards are based on nomination by PE VC firms themselves, as well as exit transactions from the Venture Intelligence PE VC database. We crowdsource voting from limited partner PE VC and advisory communities. To announce the winners of the Venture Capital Investor of the Year 2025, we invite on stage Ghana SK Advisor Venture Intelligence. To receive the award, we invite on stage
the award goes to Special Invest.
To receive the award, we invite on stage Vishesh Rajaram, Managing Partner, Special Invest, and Sunil. Congratulations to Vishesh and Sunil. Both of you, a couple of lines from you on the award and the year that 2025 was for you guys.
Venture Intelligence team, thank you so much for organizing this. Yeah, thank you so much for having us today, and thank you for the award. It's a great pleasure, a great honor to be awarded for some of the contributions that we've had the opportunity to make to the Indian ecosystem, especially on the deep science and the deep tech side. And yeah, we look forward to contributing more. We have new funds coming up and new opportunities to contribute, and looking forward to it. Thank you.
Thank you so much, sir, for your kind words. Ladies and gentlemen, up next is the VC Fundraise of the Year 2025 award. To announce the winner of the VC Fundraise of the Year 2025, we invite on stage V. Lakshmikant, Managing Partner, Pavestone Capital.
Thank you. It's my pleasure and honor to announce this award. VC Fundraise of the Year 2025 goes to A91 Partners. Congratulations.
To receive the award, congratulations to A91. A couple of lines from you, Kaushik.
Thank you to the Venture Intelligence team for the award. But as most people in our line of business know, the awards are really won when we exit the investments made in the fund. So we hopefully look forward to receiving that as well 7-10 years down the line. Thank you.
Thank you so much. Calling upon the next panelist on the stage, Lalit Walecha, Founder Partner, AVA Insights, who is the moderator today. Teresa Matthew, Head of Venture Capital, South Asia IFC. Imran Jafar, Managing Partner, Gaja Capital. V. Lakshmikant, Managing Partner, Pavestone Capital. Kailash Nath, MS, Partner, Idea Spring Capital. Dr. Chintan Vaishnav, Futurist and Techno-Policy Strategist, Nishit Desai Associates. I would like all of you to please be on the stage. I now take pleasure in introducing the moderator for the panel, Lalit Walecha, Founder Partner, AVA Insights. Lalit is a founder partner at AVA, an advisory firm based out of Pune with offices in Mumbai, Dubai and Bangalore. Lalit heads the transaction advisory service practice at AVA. Lalit has worked on diverse engagement of global companies headquartered in various countries like USA, Germany, UAE and Singapore. As a financial advisor, Lalit plays an active role on the advisory board of many Indian startup companies in the B2B SaaS space. He has also worked with a lot of micro VC firms. Before funding AVA in 2005, Lalit was in the assurance group of PwC's Pune office. Over to you, Lalit, and the panel. Hello.
Yeah. Good afternoon, everyone. Yeah, thank you for the introduction, and I believe I'll have a round of introductions with all of the panel members here, just 2 minutes with each of you, so that the audience is aware in terms of what's the background for each of you. Obviously, before I come to that, I'll just explain the session. What we're going to talk about is obviously on deep tech, the VC investment kind of the circle and what's happening in the deep tech in the India space today. We had few questions in the earlier panel that were addressed to the panel members out here, was in relation to how exit scenario would be looking at from a deep tech perspective, valuations, Some of them got addressed. Some obviously we'll put it to the panel out here because deep tech is quite different from what a D2C or maybe a e-commerce platform or a quick commerce or maybe a SaaS business or an AI business really looks like. It's really deep scientific innovation and involves a lot of time that it takes. Normal exit scenarios in normal VC documents, we see a 5-year, 6-year, 7-year exit is what we look at. We've seen few deep tech companies in the space tech sector. They've been funded for the last 8 years, and still the revenue cycle is not visible in terms of how that happens. So we'll maybe go into slightly more detail, and we've got an elite panel out here. They have been investing, IFC obviously investing into a lot of funds. We've got Gacha Capital out here. They've been investing into deep tech very closely. We got Pavestone, we've got even Idea Springs. NDA, I think the panel member out here has been on the panel of Atal Innovation, so we would want to hear his thoughts from what's the government thinking about the innovation sector, the R&D. Obviously, we're going to touch base upon the RDI fund as well. How does the RDI fund come into play? That's very relevant and quite new. And I've got some statistics that I would want to throw up before I start the questions on the RDI panel itself. So I think a small round of introduction, 1 or 2 minutes each for each of you. Thank you.
Hi, my name is Teresa. I currently lead IFC's South Asia venture capital practice. By way of background, I've been an investor in India's venture capital and private equity ecosystem for close to 2 decades across early and growth stage investing. I was last at an impact investment firm called Omidyar Network India, and I was part of the founding team of a private equity firm called Ascent Capital prior to that. Great to be here.
Good morning, everyone. Good to see you all. I'm Imran Jaffer, managing partner at Gacha Capital. We are a private equity firm that have been in business for 20 years. We think of ourselves as India's mid-market scale-up specialists, so I'll bring the growth stage, later stage perspective to this panel. We're also members of IDTA, proud members of IDTA, I must add, and so that explains my presence on this panel. Look forward to this discussion.
My name is Lakshmikant. People call me VLK, that's my initials, and I keep joking. I was telling Imran, financial services industry, that's my ticker symbol, so VLK is my ticker symbol. So I'm an accidental VC. I've been 40 plus years in the technology industry, having set up companies like Intergraph, DE Shaw, ADP. Moved to this space in 2022 along with 2 other partners. We're a $100 million fund focusing on essentially enterprise AI, digitization, and deep tech. So that's the...
Thank you. Good morning. Thank you for having me and good to be part of this panel. I am part of Idea Spring Capital. We are an early stage venture capital firm focused on product innovations coming from India for the global markets. A lot of our work revolves around IP-led companies, so a lot of deep tech work that we do. Also part of IDTA, so really be proud of the coveted team there. As I speak to you, we are raising our 3rd fund, but we managed about 2 funds in the past. Invest in about 34 companies. We broadly invest across life science and biotech, enterprise software, and deep tech. Deep tech broadly for us is robotics, manufacturing, materials, space tech, semiconductors, and we're also looking at quantum. We have one investment quantum space. We'll expand that as well. But really happy to be part of the discussion. Would love to learn from the rest of the day as well.
Thank you so much, and good morning, everybody. I am stepping in for Mr. Nisit Desai. Many of you know him. And I am not a lawyer. So partly I will contribute as a non-lawyer to this conversation. But I'm a futurist at the Nisit Desai Associates, which is an integral part of IDTA, coordinating, sort of putting together IDTA. I lead the Boston office as the futurist of the Nisit Desai Associates, where we are trying to invigorate the US-India deep tech corridor. I must say 2 other things about the hats I have worn. For 4 years until recently, I was leading India's Atal Innovation Mission at the Niti Aayog. In that process, I have been a part of this entire deep tech sort of germination, including building consensus about why deep tech, what is different about deep tech across the government, and then formulating the policy questions. And there are 3 highest level policy questions. I'll put them out there. First, how do you incentivize a researcher to consider deep questions and stay with it? Second, how do you incentivize an investor to consider patient capital and stay with it? And third, how do you incentivize a policymaker to consider disruptive policies? Because many of these ideas, a driverless car will need a different policy, otherwise there will be no car on the roads. So those are the three highest level questions that I've been involved in. One other quick thing that I would say is that in Boston, I also teach at MIT. And in my class, there are a number of students over years who have done deep techs for 10 years of their journey and so on. So I have a experience of that ecosystem as to what works there, what doesn't work there, what's easy, difficult, whatever. So I'm happy to contribute in whatever way you want me to. Adaptation is key to innovation, so here I am.
So, sir, I think we'll start with you then, because I think that will add value to the panel, because I think the US-India corridor that you mentioned, so certain statistics I'll present, and then maybe you can think, you can let me know how the government is thinking about that. And Teresa, then I'll come to you, because originally that wasn't there, but because something got mentioned, so I thought I'll start with that. So one of the statistics that I was reading before I was preparing the panel questions is the allocation of R&D and the budgets that the government spend on R&D in terms of governments. So I was looking at what China spends, it's around 2.54% of the GDP. US spends roughly around 3.5% of the GDP. India is at 0.64% of the GDP and the R&D spend that we're talking about. And it's not just this government, it's been across. The highest percentage that I saw in the R&D spend was 0.8%, 2008. So it's not to do anything with the current regime or the previous regime, it's always been the case. Having said that, I think the RDI fund that just was announced last year, the 1 lakh crore of allocation that's been done, 20,000 crore per year. In fact, the budget that got announced for this year was 20,000 crores. How do you think the government is thinking about increasing? Because I know the vision is clear in terms of ideation in the founder, how do they think about it? How do you incentivize the investors to come forward, the flexible exits? What is the government thinking while you were at the Atal Innovation, and how is it different what US and China thinks about it? Because you've seen cross geographies. So your feedback on that.
So let me say India, then US, then China, okay? Yeah. First, see, inside the government, when you talk to the industry, one aspect that becomes quite clear, quite apparent, is that there is hesitation in investing in pure blue sky fundamental research on the industry side. I'm not saying it's impractical. That hesitation is practical because they have to compete and survive and all of that. So how much can you allocate towards, that is the hesitation. So the convergence in terms of the policy is that one would have to do some kind of a matching type of an arrangement, because it seems to alleviate the hesitation. In theory, one may say, well, why do you need to match? I'm giving only 20% and you are putting 80%, so why don't you put 100%? But there is, we don't know what alleviates that hesitation, but the matching alleviates the hesitation. Therefore, the RDI fund of 1 to 3 times match, right? And that, now, this brings us to the R&D investment. Definitely R&D investment has to go up. But it brings us to how do you measure the R&D investment? Will you measure everything that comes from the industry in RDI fund as an R&D contribution? Because now it's in applied research, deep tech. So this is the same thing as, you know, for instance, if you look at the labor statistics, you see a category called NEET, which is people who are not in education, in employment, or training. Now, women who do 70% of agriculture work in villages, do you consider them as working, or you don't consider them as working? This is the same question that will come up in terms of the R&D also. Now, let me go to United States. United States, very interestingly, has a very different starting point. Their starting point of deep tech is the World War I and II. They had to do deep tech. because they had to win the war. That spurred the military-industrial complex of Vannevar Bush, which spurred the DARPA, which spurred the National Science Foundation. We came from the other side. We are now, we did sort of easier, more cost-effective things. We are now reaching up to deep tech. So our starting points are different in some sense. United States has a different struggle. They're having difficulty doing low-cost things in healthcare, for instance. You know. And China, of course, China, I know less about China, but I think China has the capacity to take the end-to-end system and say, I'm going to allocate this much here. Done. That, I think, in our processes, we don't have that freedom. That's my observation.
I think very validly said in terms of the way why US started spending. There was a need because of the war-like situation, and I think the other industrial revolution that happened, and I think all of that kind of led to that. That said, as I started the session with deep tech having a different mood as compared to a normal other investments that we do, like maybe something in robotics or space tech, and one of these space tech examples that I gave. So do you think, Teresa, from a perspective that while you're investing into various funds, and one of the investments that you did last year, which is Trifecta Debt Fund, and substantial of their funds is going to be deployed towards certain climate tech, certain robotics related stuff. Do you think there's a need of, and I think in the previous session also they mentioned, do you think there's a need of a specific deep tech fund just focused on deep tech, or it could be integrated between the funds itself, like what Idea Capital is doing, or what I think APEX'26 is doing? So do you think a need for a deep tech focused fund?
Got it. I mean, if you just step back, I think IFC has been an investor in the venture capital asset class in global emerging markets for several decades now. And, you know, venture, as we all know, is a highly liquid, you know, 10 plus 2-year asset at the minimum. And, you know, within that time frame, a lot of things can change, right? So I think, so, you know, globally, I think our experience is that just from a pure, you know, performance and sustainability standpoint, generalist funds have done better than specialist funds. I'm not taking deep tech as such, but overall, and therefore, because of that experience, IFC, you know, in general invests, you know, more in generalist funds. That's not to suggest that there is no specialist capability in these funds. I mean, many of these funds, they have partners who are specialized in, you know, areas like deep tech. So if you look at our venture capital portfolio, I think we may have done, you know, 2 out of the 15 funds that we back, maybe specialist funds. Yeah, I think because of the long tenure of the asset class, you know, we've taken an approach which is more generalist than specialist. Having said that, I mean, this is such a large, you know, capital pool that has opened up, and like, you know, everything said, it is with a specific objective of catching up on the gap in India's, you know, R&D spend. I think, and, you know, by all means, there will be room for deep tech specific funds. I think the key is to find alignment between all the LPs with respect to their strategic, financial objectives and exit horizons.
Agree. I think, yeah, valid, and I think the diversified fund is where I think, like you mentioned, the generalistic fund and agnostic to the industry segment. I think that's how you de-risk yourself and kind of spread your bread. I think, Lakshmikant, to you, because we've taken early bets in a lot of the deep tech companies, like you mentioned, the robotics and the other segments, like I think in space tech also, you've invested in few of the companies. What is your message to your LPs where you already have agreed to an exit period with them, like 7 years, 6 years, 8 year or 10 year window, whatever you have, or 10 plus 2, the standard one that normally VCs follow? What is the message that you give to them when you're allocating certain part of your capital towards a deep tech portfolio that you invest in?
Yeah, I think having that upfront communication with LP is very, very crucial. And in fact, if you look at our journey as well, our first fund was 7+1+1. Second fund was 8 plus 1 plus 1. Third fund will be 10 plus 1 plus 1. What has been our learning is also a lot of a significant part of the alpha that we're generating in the winner companies actually comes in the 7th or the 8th year. And that's true about a lot of IP-led underlying companies as well. I mean, take any segment of deep tech or any, even if we look at some of our enterprise software companies where technology has played a strong moat in becoming the long-term competitive edge of the company, a lot of this is realized towards the 7th or 8th year. And our LPs, given the nature of their exposure and business as well, realize this and have been comfortable with us. But having said that, one crucial part that's part of our quarterly reporting also is keeping our institutional LPs as well as the family offices who have been part of our journey updated on the specific progress of these companies, where you might not see a significant commercial uptick month on month or quarter on quarter, but there is a significant, let's say, material improvement or material progress in what the company is building. For example, there's a company called Oculo Aerospace in our portfolio, which recently got a certification for, so they're building a high altitude pseudo-satellite. This is used for long endurance monitoring of specific geographies. Comes handy in military and defense applications as well as commercial applications. And they've got a specific certification which is first in India for anybody in that space for long endurance monitoring. And this is opening up doors for a lot of advanced conversations that they are having with commercial clients as well, potential, existing as well as potential. Now, this is a significant needle mover for a company at an early stage. Now, I mean, we are actually building out a long note to our existing LPs on why this is important for a company like this, right? You might not see, again, a strong movement in the revenue top line right now, but it will happen in the next few quarters to come. So this gives them as well comfort, saying there's movement happening, and we are also adding value as we engage with these founders too. I think that in our experience has proved very useful for the relationship in the long run as well.
That's interesting. Imran, I think I would want to put up a question to you because that's early stage and you come at the point of growth capital. And again, as I said, it's a long tail in terms of how the exits are going to look like, and you enter when the growth stage is happening. So, and what is a sweet spot while you want to, and you've been the deep tech committee as well. So what is a sweet spot for Gaja Capital as a growth capital fund to maybe invest, say, $10 million into the next round that is happening? And how do you see the mid-market problem being solved out there? And what is the visibility of the revenue that's coming in, and what's your take on that?
So first of all, we think the deep tech moment is here. And what I mean by that is, you know, when we started investing 20 years ago, the first sector that we found, and we were very early, was education. Like, no one was investing in education. There's some parallels to education and deep tech, which we can cover later. But, you know, we've always been, we try to be a little ahead of the curve. We think that deep tech now has, it's still a shallow market relative to the other sectors in the private markets, but it still has a steady deal flow of companies that have, let's say, were founded 10 years or more earlier. You know, compared to, you know, the other sectors in which we invest in, here, companies at the growth stage are at least 10 to 12 years old, and they'll need at least 20 years before they start hitting IPO scale or meaningful strategic M&A scale. The good news is there is enough deal flow of companies that have gone through that chasm of 10, 12 years and are now looking for very specific interventions from growth stage investors like us. And that's worth unpacking a little bit. What does that mean? So when we say that we think of ourselves as, you know, India's mid-market scale-up specialist, it means that you know, your lens is completely different. Because if you're, let's say, a founder who for the last 10 years has just focused on the toughest problem of, like you were saying, how do you incentivize a researcher? They've picked a very hard problem. They've gone through, it's like chewing glass for 10 years. They've tried to, you know, create something innovative, maybe got a few patents, maybe got some early pilots, paid pilots going, but they haven't been able to focus on go-to-market or building a team to sell or to scale at all, actually. And this is unique in the deep tech context. And so when we come in as a growth stage investor, we have to help them transition from 10 years of doing that, that's their muscle memory, to now say, okay, you've done all that cool stuff. Now let's sell as much of this as possible to as many customers as possible. And in the next 5 to 7 years, we create either an IPO scale company or a strategic M&A exit. So I think that's a differentiated lens that we bring to the table, and we're very excited, of course, to.
So one added question to that, Imran. While you're investing, like you mentioned the transition of these companies, that where they are, they might have done innovation, they've got groundbreaking, I think, R&D that they've gone patents. I'll give you one classic example. Supposing you were investing into a company which is like, I'll give you one live case example, just a hypothetical one for you. Supposing there's a space tech company which is into collecting debris in the space. Like there are so many launches that have happened till now, say around 20,000 launches in the space that has happened till now, and we are expecting 50,000 in the next 20 years. So it's going to triple itself. Now this company has developed something, they are into the space debris collection, and they have an IP, patent, everything done. They are ready to raise their next growth capital because it's proven revenue is not started. How do you value these companies?
Yeah, that's the tough part. And that's a very hard problem. I don't have an answer. I think we'll have to pick a leaf from some of our early stage, colleagues. And we struggle a lot with it, because just like the deep tech founders have spent 10 years building muscle memory on innovation, we've spent 20 years building muscle memory on financial modeling and underwriting. So we have to unlearn. So we'll have to break all those screen one rules when we look at a company like this. But I must say that we'll retain a bias on financials. And what I mean by that is it's highly unlikely that Gaja Capital will invest at the growth stage in a pre-revenue company, even if it's super exciting. What we would likely do is invest in a company that has some cumulative track record of paid pilots, even if they're not full-fledged contracts, but some evidence that their technology has met the industry, and the industry has paid commercial dollars because they see commercial value for what has been built. That to my mind, would be kind of the floor criteria. If we're lucky, we'll get a predictable revenue stream, but I don't see that in deep tech. But as long as there's a cumulative, X million dollars of paid pilots, we'll be willing to take the leap of faith.
At that point, what Imran said, again, coming back to the unlearning as well, right? And this is a classic example of space tech. A lot of the traditional venture investing has been around, let's say, consumer tech, SaaS, where the specific well-defined metrics that you track your progress, or even for that matter, even sizing the market up, right? For example, the specific case where you talked about debris clearing, right? You go into entire modeling specific to that use case, saying how many satellites, what's the probability of collision, hence debris, and hence what's the value of clearing debris, because there's a potential, let's say, domino effect of that affecting your rest of assets also. So you're thinking of extension of the life and attaching a value to that, and hence how much can you charge, and hence how much is your market value, right? So this, I think this level of, let's say, sector-specific metrics is not defined very well for deep tech, let's say, and that's where a lot of value addition that we can do as early stage investor comes into picture, and that I think we, thanks to IDT as well, I think we have the part of our work is also to define that for specific sectors, and hence even broaden the market for understanding and awareness for early stage as well as growth stage investors. That was.
So MIT has an outlet called the Engine. Many of you may have seen it. It's a deep tech incubator. It has different games of rules of the game as compared to the Martin Trust Center, which is the regular incubator at MIT. And the one dimension that, well, so the two things that they look for when they have these, they onboard a team into Engine, is that did these people publish in top peer review journal? So because a lot of people accepted their work, that is one thing. And second, they invest in people because they don't know how they will pivot, but will this person stay with it? And then it will find a market, because oftentimes it's very hard to foresee a market. I'll give you a very quick example. Professor Doug Hart had this technology which is to use small aperture X-rays to detect cracks on naval ships. You and I have all experienced that technology today if you have gone to a dentist to X-ray your tooth. That was his work, right? Invested in people. and got it there.
Couple of, can you hear? Yeah, great, okay, thanks. So I think we are looking at what we call as a dual cohort strategy, which is we have probably about maybe 80% of our portfolio on Series A plus, which is there's an established product market fit, and part of the cohort is on early stage. And so I think when you go with that kind of a strategy, the idea is, at the very early stage, very difficult for you to actually discover the price, okay? End of the day, deep tech is, deep tech, but what's the deep tech business solving, right? If you get too focused on the technology per se, the outcome never gets measured. So I think at the initial stages, getting the technology right, okay, you need to support. And after some time, the market and the price will get discovered by itself. So one of the approaches that, we have been going to consider for our next fund is, we want to be able to go to a founder and say, that until your Series B, until your 10 million, I will fund you, okay? But it will be on a milestone based, okay? That is, here's $1 million, get me TRL3. Here's another 2 million, get me TRL4, okay? And then that way the founder is not running around every year for, fundraise, okay? And he knows that there's a firm here going to back him, okay? And then we believe at some point the prize will get discovered by itself, okay? So I think too often, today I think every fund now is a deep tech fund. Okay, which fund is not a deep tech fund? Okay, it's like every company is now an AI company, right? Overnight you become AI deep tech company. So, what is this deep tech? Okay, so, and if you take some of these applications, it's not just about creating something new. It's about the transformational ways of using existing technology. And a lot of what's happening in deep tech today is that. Okay. Fundamental research apart, how do you use technology in a very transformative way? I think that's very important, okay? And coming back to the first point, it also depends, it's more a society kind of question. You talked of R&D spend, right? R&D spend, if you look at it from a PPP perspective, it's very different. Effectiveness of the R&D is very different, okay? You could say China, 1/3, maybe equivalent to 3 times or equivalent to the US. So you would look at it very differently. And I think about it like India, we solved roti, kapda, makan, bijli, bandwidth, okay, and now deep tech, okay. Now we are in a position to be able to afford things like that, okay. So it's also a question of where the society is, and for deep tech, so-called deep tech to succeed, you need the government to buy. If that doesn't happen, it's never going to really take off. So that's why.
And I agree. The government has to buy, because I think the space tech and the robotics or the drones, I think most of the orders and the government orders that you'll see, it will come from the defense and the other sectors that we have. I think that's the practical use case and the revenue monetization, because private sector is getting into it. Like the example that you mentioned of dentistry, that could be a use case that could come out of or culminate out of the R&D that has been done. But that's not the direct audience to that. I think the initial traction would be that they want to do something in that particular robotic space or maybe the drone space that they have. I think, Imran, you mentioned a very interesting case that you mentioned is comparing it to maybe the edtech sector. So how do you compare a deep tech and an edtech sector? Because you spend significant investment portfolio that you have. You've been you're on board of edtech company yourself. So how do you compare these two sectors as such? And where do you think, in terms of the evolution, the edtech has seen and what deep tech is going through today?
So in education, we've had some success. So we invested in a company called EuroKids, which was a preschool chain with some K-12 schools. And then today it's called Lighthouse Learning, and it's one of the largest organized preschool and K-12 chains. But they recently celebrated their 25th anniversary. We invested in a company called Teamlease, which is a temporary staffing company. And I believe they're also 25 or 27 years old, listed on the stock exchanges. We invested in a company, a learning software business called Educational Initiatives, which has been for the last, coincidentally, 25 years, been working with schools in India and the Middle East and Africa, offering personalized adaptive learning solutions and concept-based assessments. And these are all, in some form, Educational Initiatives is an all-out IP-based business. They started in the machine learning paradigm, and now they're leveraging AI to help students learn better. And the example of EuroKids and Teamlease was really about identifying a niche that was on the anvil of going mainstream and then investing in them at the right time. And I think there are two interesting lessons for deep tech on both. So wherever a market exists but is small, but on the anvil of going mainstream, let's say defense procurement as one example, or cybersecurity being another example, there you could have this Eurokids-like phenomenon where you get companies that have been wrestling with a niche market for 10, 12 years, as I described, but the next 8 years will be about just rapid monetizing, profitable growth, monetization, and if you catch them at that right time, this is the growth investor's lens, then you're able to create that value and see the operating leverage kicking in. And the example from EI is that it just, true innovation just takes a very long time. And that's why my father's a scientist, by the way, and I used to work at Dr. Reddy's, so I understand, like when you talk about incentives, money is not everything, right? I mean, ISRO has proved that money is not, prize money is important, but is not everything. You can create world-class innovation frugally. Dr. Reddy's was a great example of that. Dr. Anji Reddy's life's mission was that. And I know my father doesn't care about prize money at all. He just wants to publish even at 86. So I think what we need is, of course, a floor for researchers, some kind of a floor so that they're not distracted by their day-to-day financial situation in order to keep wrestling with a problem for decades. But then you also need a market-making mechanism. And I think it's a great idea that the government is stepping in, again, to give investors some kind of a floor so that they're incentivized to take these long bets. It's great that government budgets are getting unlocked in defense, et cetera. But I also want to point out that corporates must step up also. There's a great lesson in the pharmaceutical industry. The entire out-licensing business is large and deep enough. We all know that Big Pharma completely failed in innovation. Not for the lack of money. They had billions of dollars thrown at novel innovation. They couldn't create anything. And the startups of their ecosystem saved the day. But what Big Pharma did rightly was to learn to collaborate with that ecosystem. And now you have a very deep out-licensing market, which is again a market-making mechanism. So I really hope that deep tech will, of course, the incentives and so on greatly help. We should be investing in our universities and giving some kind of a floor for researchers to do pure research. But also, how do we incentivize CSR-style corporate R&D, where they don't have to invent everything themselves? How can you encourage corporates to have a line item in their P&L that says, this is R&D budget for collaboration? And I'm actively staffed to look at startups in deep tech that I can collaborate with, in-license, buy, acquire, and drive innovation. That would be a huge multiplier effect.
So on the R&D, like when you were speaking on the R&D fund itself, and it's to all the panels, because you've been on panels and Teresa to you as well, the RDI fund itself that has been culminated, it's kind of deployment towards company who are headquartered in India. Okay, that's the first thing that the requirement is. Now, when I look at these R&D companies, the deep tech companies, many of them are not headquartered in India, though the founders are in India. It's a very classic case where we've seen companies go outside, headquartered in say, Singapore, US. A lot of these space tech companies, drone companies, they headquarter themselves in that geography. The reason, much mature market, much mature ecosystem, investors realize the kind of needs that these the startups have. In fact, I bought a founder, I'll tell you a very classic use case. So there's this founder who was working in the AI space, and he says that AI doesn't have memory. Doesn't have memory of its own. Okay, what it does, it's kind of culminates all the extraction of the information, the LLMs that are there, but doesn't have its own memory for yourself. Like if you're using ChatGPT, if you're using Perplexity, what is Imran's thought in ChatGPT would be different what Perplexity realizes, because it's a separate base. Now what you could do is take your memory to any platform, ask it to humanize an answer or an email that you want in the form that you have. Okay, so he's working on that technology. He did it through an open source. He went to GitHub and got some rating. Went to the US, raised capital. He doesn't have any team in India. Indian person went to US, took an O1, migrated there, settled in the US. We are losing out talent. There's exodus of talent that's happening. Not a very large case, but when we talk the R&D, most of the large founders that we know of in the space tech in India itself, they're headquartered in the US. Like one of the space tech company that we know is Pixel. They're headquartered in the US. Then it's not an India company. So the R&D, if somebody wants to even tap that, the government resources are limiting it today. So don't you think there's a need to change this approach of deploying the R&D fund, and this is policy, and it's not a question that is related to the company as such, but a policy where it allows the flexibility of these companies to enjoy the best of the both of the worlds, as in they can go and tap global capital, as well as look at growing in India itself. Because ultimately the research is going to benefit India per se, because there will be a lot of talent that will come out of that. There will be employment that will get generated. So because you've been on the panel, that's a question that as an outsider that I have, like while you've been to the Atal Innovation, you've been to the IDT, how is the government thinking about is to retain this talent and to open it up not just to an Indian headquartered company, but also global companies who want to do some kind of work in India as such?
I'll just give a quick shot because I had a chat with a couple of very senior people in the government on this. I think, and please correct me if my understanding of this is incorrect. So I think the government policy on RDI is driven more by resilience. That is, the government wanting to build key critical technology and host and have IP in the country. I think that's it's not just about headquarters, by the way. They insist on IP being in the company and in the country for a certain period of time. So the government is interested in building IP. I think it's driven by the fact that today in this geopolitical situation, anything in the world can be weaponized. Yeah. Okay. And the fact that you may, for example, God forbid something happens with us in the US, tomorrow morning my Gmail will not work. Okay. So government doesn't want that to happen. Okay. And in that sense, if you look at it, I think the intention of the policy is very clear. Okay. How, the community works around it is something left for the community. I think one of the way to work around it, you do have part of it is an Indian fund, and part you try to raise capital from outside, which you deploy outside. Okay. So I think the intent is very clear.
Yeah, I actually, Chintan, and will probably know the government's mind better than I do, but I would just say that, listen, even in India, you have these debates, right? Like, why do private equity and venture capital firms only invest in Bombay, Bangalore, and Delhi? Like, there's so much innovation happening in Indore and other places. I grew up in Lucknow, so why not invest in Lucknow? The fact of the matter is that founders and innovation will always travel to where the prize money is the best and where the friction is the least. It's just a fact of our lives. And so for certain technologies, let's say you're working on crypto. I mean, Dubai is just the best pin code right now because it's the most enabling environment, right? If you're working on AI, the fact of the matter is the West Coast of the US is the best place to be. Now, the question we have to ask ourselves, if we want intellectual property to be here, garden walled, I almost said stone walled, Freudian slip, but garden walled in India, then the prize money has to be in India. And I think that's the onus all of us must take. This is not, I wouldn't fault the founder, and this is not a morality issue or a patriotism issue, or even a policy issue, because the government is doing the right thing. I think the question is around incentives. How do we ensure that the prize money is big enough that founders will choose commercially to stay in India and keep the intellectual property here?
Add to that point as well. So at an early stage, it's an early stage perspective. In addition to the prize money, a couple of things that the founders chase is the availability of infrastructure, availability of talent. This tradition in the deep tech space hasn't been in India. For example, we recently gave term sheet to a company in the life sciences space where the founders are actually based in Cambridge University in England, but are Indians, by the way. Just figured a way to build their first prototype there. But but have also figured that the use cases for their innovation is in India and will be setting an Indian team, but to start with at least their first set of commercial use cases are still in that part of the world, right? Now, would it have been a prudent choice to build that out of India? May not be, because the kind of talent, research talent they have been able to tap into is superior in that part of the world for now as compared to India. Probably we, as a community, in addition to, of course, we'll take exposure into these innovations as well, but there's a need to build the infrastructure too for these innovations to catalyze and grow too. And a part of the RDF is also coming into that. I mean, the beauty of RDF is not just, in addition to the fund of fund, it's also direct investments into growth companies, but also into education institutions from which some of this research will come into. Of course, at tier level 4 for now, but the entire community will benefit from that intervention. And I think we'll be able to build that entire ecosystem for deep tech in India, and hopefully that will happen sooner than what.
So agree with what has been said. It is definitely an ecosystem question, in the sense that I think the first point that there are some facts on the table within which you are trying to do, if you are the government, you're aware of all of these things, but you are having to do constrained maximization as opposed to an unconstrained leapfrog. So the constraints are what? First is there is an underlying international relations play. So interdependencies are there. If you watch the movie Gandhiji says that I want them to go, but I want them to go as friends, because there is life after freedom. So that is one piece. There is this internal sort of there is this whole piece of where is it right to build. For instance, I would, in my Atal Innovation Missions job, I had a job of going to small children in rural villages in tinkering labs, and I had to explain to them what Atal Innovation Mission does. And I would want to tell them that we build innovation ecosystem. Obviously, that would make no sense to them. So I would often ask them a question that, you have a friend, and that friend says that I want to be an actor. What do you tell them? Most kids will say, "Hum batayenge, Bombay jao." Why Bombay jao? Because there is a producer, there is a director, there is a financer, there is a this and that, and I said that's an ecosystem. In deep tech, it is really true that we have to first, like Jim Collins said in Good to Great, we have to first accept that there is a problem, right? The problem is it is easier to build deep tech in many other places than it is today in India. So once you accept that, then you have to create that instrument that allows you to keep the IP in India, the finances in India, all of that. We're at an early stage and an inflection point with something like the RDI fund, but we have a long way to go. And it will take sometimes, people ask, okay, when will we have the next Google or whatever? When we will start teaching in our universities from first principles. It will have to start from all of that,
Yeah, rightly said. I think the protection of the IP, while I look at the regulations in the US, like I was speaking to somebody in the semiconductor industry, they are in India, domiciled, headquartered in India, incorporating a US subsidiary for researches and other activities. There is an export regulation in the US that prohibits even a subsidiary entity to transfer export information to their home country in India. So there are regulatory environmental changes that would be required apart from the R&D space itself, because every government, like the geopolitical situation that we spoke about, they are being focused on how do we protect it, how do we retain that R&D technology in the country itself, even in that example as well. Like Suzlon, right? Suzlon, classic, old days, I'll go back to the old days. They acquired a company, RE Power, in the Netherlands. Okay, that's what they did. And they had a technology of installing windmills on sea or the shore of the sea. they couldn't get that technology from there. The premise of the acquisition, it was heavily debt funded. Post that, Suzlon had to do 3 restructuring. Now they're back, they're kind of profitable, they're doing well. They sold off that company because they were not able to bring that technology from that geography from Netherlands to India. So that's, I think, the protection where the government needs to put guardrails in terms of what goes outside, how do we protect it, and how do we move forward from there. One open question to, again, all the panel members out here. While we speak about deep tech, there are a lot of the sectors that we spoke about. We spoke about robotics, we spoke about space tech, defense tech, maybe drones. But I think the valuation game that I'm seeing today on ground, AI is taking all of it. Like AI, whatever we call the small models, the large language models, the AGIs, any company who says, not a rapper, certainly not a rapper, because rappers, I know it's not there, but Teresa, from your perspective, do you think the valuation game is being won by the AI space itself, or deep tech will catch up soon?
I mean, from our standpoint, we, are more interested in the developmental use cases of AI, and quite interestingly, the power users of AI that we see in our portfolio are companies like Cuckoo FM, which generates high quality, multilingual content using AI, and likewise in healthcare, education. And there, I think, I don't see much of a valuation game here. It's more driven by, traditional growth metrics. And in deep tech as well, right, there are pockets of overvaluation everywhere. And yeah, I mean, obviously when such a large, capital pool is unlocked, there will be distortions. And yeah, time will tell.
On valuations, right? So, yeah, I mean, AI is crowding out. So let's start from where this all started. So in the West Coast, I mean, anything that is not AI is not even investable. It's not even about valuation. So the AI has just crowded out the whole venture market. Venture capital firms have changed their names, their strategy. So that's being done wholesale. In India, it looks like there is actually, to be brutally honest, I don't see a lot of real AI yet in India at the early stages. We, for instance, chose to invest in an AI services company to participate in what is increasingly a wave. So we invested in Fractal Analytics, again, coincidentally, a 25-year-old company. They've been at it for a very long time, and I think they'll be net gainers of what's happening around the world. But deep tech is a great, counter to that. In many ways, more real also. One way to look at what's happening around the world is, where is India's right to win? India's right to win is not the large language models. It's not the hundreds of billions of dollars of infrastructure. But India is so good, repeatedly over decades, we've seen that consistently. We're great at frugal innovation at population scale. UPI is an example, ISRO is an example, the Indian pharma is an example, automotive sector is an example. And so the intersection of AI with these strengths, inherent strengths of biotech, pharma, AI plus software, AI plus, automotive, precision engineering, these are areas where we think innovation will be found for early stage investors as well, and for growth investors like us. So that's what we are focused on. We're less worried about the noise and the headlines around the world.
Yeah. No, I think it's a great question. I don't think anybody really has an answer to the valuation question, actually. So, I mean, I think the question is, everybody's been talking, is AI a hype, is it overvalued, etc., etc. Answer is, we really don't know, okay. I look at it two ways. One is, look at the valuations. It's insane. You take, let's say, Anthropic. What is that? 14 billion, 15 billion revenue or something like that, and $380 billion valuation. It's Databricks, $1 billion revenue, $138 billion valuation. They themselves project that in 2030, there'll be $3 billion. So, I mean, really doesn't make sense, okay? And the good thing is I'm not the finance guy. Like I said, I'm the technologist. And there are many wise people in this room who can probably justify that number, okay? Second thing is look at what's happening. The circular nature of the funding, okay? OpenAI is funding, Oracle is funding somebody else, and it's crazy, okay? And look at some of the way debt is being raised to fund some of these high capex items. Oracle, $130 billion debt, okay? I don't know how they're going to even service that thing, so, okay? So there is a lot of, pointers which kind of say this is going to, break at some point in time. But at the same time, the hype is so big, okay? And this valuation and stock market pressure is so huge, okay? If I was CEO of a Fortune 500 company, I would be worried, okay? I don't know, but I'm hearing all of this and I'll be forcing my people to use AI whether they like it or not, okay? So we really don't know where this is going to end, okay? So my take is we need to, I totally agree with Imran, we need to focus on what we understand and what works, okay? And just go for it, okay? Whether, deep tech will ever catch up with AI valuations, I don't know, okay? And honestly, I don't think so, okay? Because, like I said, if you look at it as pure business fundamental, is the business making money? No. Then how are you even valuing it? So as long as there's easy money in the world, and countries can print money, okay, we'll have this kind of stuff.
So I have a little bit of a philosophical take on this. Right? I think as you look at human history, there are specific inflection points which are points in our evolution from where we won't go back. For example, wheel, fire, paper, electricity, internet. You will not go back from that point. You will always move forward. I think AI as in its current form is something like that. So, I mean, when you have a hammer, everything looks like a nail. So probably that's where the hype is. Every problem looks like you can solve it with AI. A few things that we have observed in some of our, we have this opportunity to look at some innovations grounds up. So at very early stage also, right? So some of the, you can talk about multiple areas where data and AI can add value, right? From manufacturing, you have supply chain, you have intelligent procurement, you have, let's say, healthcare workflow where data can add a lot of value. And some of these can be large spaces as well. I think broadly there is more AI-led feature development, and then there is core AI development as well. I think a lot of domain expertise comes in, when we talk about founders who are domain expertise, a lot of insight comes from identifying those problems which are worth solving using this, with this hammer in hand, right? We used to talk about this in robotics as well, just 2 or 3 years before. There was just a boom in just so many robotics deals being done at an early stage. And everyone around the same, shop for automation, you have pick and place kind of robotic arms, etc. Some of them have hit sort of a plateau now. But one of the realizations and notes that we took from this, and we have been looking at robotics for a while and we haven't taken exposure. And that's something that we keep asking ourselves, are we too late to the party or was it a good miss? One of the learnings was, I think, looking at the underlying value being created from the technology is the answer to seeing if it's hype or not. And how do we quantify it is a question that we are asking ourselves. Probably we have to define specific metrics for it. To us, AI is around that as well. One area where we are trying to go deeper is a combination where atoms meets bytes, which is one specific area on the novel materials. In specific areas, could be life sciences, could be, let's say, even using materials in aerospace, where I think we haven't understood the physics and biochemistry well yet, where AI, if it can expand our horizon and accelerate discovery of these use cases, probably it's an area where we can look at high value outcomes. But that's just one of many, right? But I think underlying value creation is probably a good metrics to define and see where you can really keep the noise out from signals.
Just one quick dimension to this very insightful comments. There is definitely hype. And obviously other applications and problems that are non-AI are not gone. They will remain there. But I think the question of whether the value is in line with, or valuation is in line with value, that is not a AI question. That is a general, more broader question. The question, the subsequent question is, how do you bring valuation in line with value for Indian startups? That is one piece that we worked on mostly, you know, the observation was Nishit Bhai's observation. During G20, I led the creation of Startup 20, the group that India added to the architecture of G20. At that time, he had come up with this idea that, you know, software sector, we did well around the world, not because we could write software. Of course, we had to be able to write software, but we were able to convince the world that we are serious about governance of the software sector. Can we do that in the startup sector? Because otherwise, an investor will never be sort of confident about investing somewhere. And so we put out this startup governance framework of what a startup can do at an early stage, a mid stage, and that applies to all, including the, but the best people to implement that is to hold startups accountable are the investors, who can say that, look, to show me your governance structure. Are you serious about governance? Or are you saying that, oh, I'm creative, so what do I do about governance here? And so I think that framework is online, of course, the startup governance. It has gone global. I urge people to take a look at it.
Yeah, I've seen that. That's interesting governance framework. I presented it somewhere. I saw that report. It has I think, a evolution matrix in terms of the stage of the company, where the funding stage, what are you doing? There are some things that are driven by the SHAs also that are captured out there in terms of the board composition, the approvals, all that. I think I
exactly
admire that. I think that's amazing. Yeah, man,
I just wanted to make a quick comment, a cultural comment. You know, since you know, if you compare the US and India, I mean, in the US, children are taught I think first principles thinking came up on, you know, what will create the Google of India. That's absolutely true, right? So children in the US, they're taught to think independently, first principles, but most importantly, they're taught to earn money from an early stage, an early age, whether it's working in McDonald's or you're a paper boy or you do run errands. I mean, you read a lot of these biographies of American entrepreneurs, and that stands out. And what do our Indian children do even today? Their focus is to maximize grades. And when you look at an example of deep tech founders and the orientation, most of them, and there are some exceptions, are focused on being the best technology in the world, maybe even writing in the best, peer journals, and fine-tuning it to perfection. But I think they need to learn to be commercial from day one. And that's what the Americans do really well. And I think culturally, I think if we can get that mindset going, especially in the context of deep tech, we'll have far more scalable opportunities from the selfish point of view of growth stage investors, by the time they are 10 years old.
I agree on that. And I think one of the things that was mentioned on the robotics, why you see a lot of these robotics company, I have a take on that. It's because I think a lot of the education bodies spend on having a curriculum around robotics at the school or college level or at the engineering level. They're teaching robotics. I'll go down further. There are kids participating for robotic competitions by the age of 8 in India. Okay, that's how it starts. That's why robotics has seen such a lot of use cases in robotics. It's not just today. I think for the last 7-8 years, we've seen a lot of robotics company. One of the founders, you can speak to anybody. You'll ask them, when did you start robotics? He would say, I started robotics at the age of 11 or 10. That's what they would say. It goes down to the grassroots level. I think from the education sector, you start ground up. And I think rightly mentioned, I think Imran, what you said about the first principles. I was looking for my daughter in terms of, I mentioned to you, right? We wanted to look at LSAT, but we're looking at other comparable things. And when I was looking at SAT, the SAT preparation itself, obviously the exams that you give, but apart from that, the interview and the bio that you have to write on yourself. And what do you write about yourself as a kid, maybe a 14, 15-year-old kid? What do you write about yourself? About your education that you've done? I think you need to go beyond. I think rightly you mentioned that. So I think the ecosystem has to change ground up from the education system, the parents, the children going to school, the education bodies, the government, the policy, all of that. One comment I wanted to make, because I wanted that question to be put to Nishit Bhai, but since he's not here, that I would want to just add to that. Maybe if panel members have any comments on that, you can add to that perspective. Is on the certainty that the government is coming up with a lot of the regulations that are there on ground today. So wanted to speak about two things. One, obviously, the Tiger Global judgment that all of you might have read in terms of what's happened. There's a promise that the government made in terms of the grandfathering of Mauritian treaty that was there, TRC that was obviously established, what a TRC really means, and the Supreme Court coming up with a judgment which is against, now it's nothing to do with the Supreme Court, but it's a litigation that the government themselves provoked. The High Court judgment was in favor. A lot of the jurisprudence that is coming out of the ground, not just Tiger Global, but Bini Bansal's judgment that the Flipkart sale of shares, he's being taxed on those shares as well by the tribunal. Hayat for the PE issue that arose last year. So there are a lot of unpredictability that's going on. I think what the government needs to do, set right for India to be attracting global capital, and we need global capital. We've seen a lot of domestic funding, family funding that is happening in India, family offices participating, but I think we still need, last year the FDI numbers, while we look at the FDI numbers, net FDI was $0.3 billion. Net FDI, the gross FDI was $81 billion, that's fine, but the net FDI, there's a lot of capital that went outside than came in India. So there are a lot of changes that are required. Fortunately, the finance ministry this time announced that they will implement a committee to relook into the FDI regulation, the forms that are getting filed, the administration that is happening. I think the simplification is something that would be required to attract, because ultimately deep tech would need global participation. It's not just local VC firms. In fact, a lot of the VCs, the LPs that you may have, they may be global LPs, right? It's not necessary that you have domestic LPs. There are global LPs who want to participate, come out here. One of the great regulations that the government has come up with is the GIFT City, again, to promote that. How global funds, why can't they set up in GIFT City? They've not been able to attract. There are Indian funds who have gone to the GIFT City for making cross-border investments, but there are very few who've incorporated in the GIFT City. We've spoken to quite a few. They ask us, where do we set up? Where do we go? Where do we go to Singapore? We go to Mauritius, Dubai, DIFC, all those places. We give them an alternative that GIFT City is available. Why not look at GIFT City? But again, the regulations that SEBI has today is very different from what, so they don't really go there for taxes. When I compare, GIFT City gives you a tax benefit. Mauritius also has certain tax benefits that are there. There are treaties that are there. But GIFT City is very attractive when you look at that perspective. But nobody wants to look at it because of the regulation framework that exists in the AIF sector today, even in India. Like the rolling fund, we don't have an exit clause like a lot of the US companies. Why they go to the US? There is no exit clause in the definitives at all. The SHA, which is obviously the IRA, the voting agreement in the US, doesn't have an exit clause. Just imagine that. Can we imagine that in India? Can a VC say that, hey, I don't want an exit clause, I'm putting money, looking at the founder, looking at the fundamentals, looking at the matrix? Rare. So there are principal changes. There is a lot of thought that the government has to do both on the regulation, not just from an income tax, exchange regulation, AIF regulation that are there on ground, giving the flexibility to the AI. I'll give you one more classic example. There are two AIFs, Indian residents, not AIF, they're VCs, Indian residents, but they are not having an Indian fund. They don't have an Indian AIF. They have a setup in US that's not even tax effective. The worst form of setup that you can have. But they're okay doing that because of the flexibility and the ecosystem that supports them around that. So there are a lot of ground up changes, that policy changes will have to happen. If deep tech has to grow in India, VCs participating, the RDI fund is a great start. I would admit it's a great start. And I would say that 0.64%, I agree it's not measured the right way. It requires many other things to get added to that, I'm sure on that. A lot of things will get added and then I think the ultimate number will come up. But just as a percentage, if you say 2.5% of a GDP of China size versus 0.6, it's a big gap in itself. So a lot of things to catch up. But I think deep tech, I'm quite interested in looking at how this space grows. Maybe closing comments from each of you.
Can I channel Nishit Bhai into this? Yeah. So before the panel, you had told me about these two questions which I sent to him. So here's his answer. Obviously, he'll be infinitely more insightful than what I can offer you. But he says the Supreme Court judgment that is on Tiger Global that you mentioned he said, in my view, is completely wrong. I might sound little biased as we represented the case, but it's like one country not accepting passport issued by a foreign country on the ground that foreign country wrongly issued the passport. It upsets well-established jurisprudence of at least the last 3 decades. So that's one comment. Continuing on more broader issue of the budget, etc. As far as the budget is concerned, it is okay, but I expected big bang reforms like removing exchange controls to introduce capital account convertibility, reintroducing Indian depository regime to make Indian capital markets global, reforming gift city regime to make it truly global financial center attractive for global investors to play global game. So so the budget is good, but it could have been much better. Now the time has come to think big, big scale, deep tech, and not just think India, but think global. That's it.
That's really impeccable. I heard that video of, I think you have a YouTube channel, Nishit.tv. I had heard Nishit Bhai speak on that. And the idea was a very interesting topic. I'll just deep dive 2 minutes into that. So IDR is basically foreign companies getting listed in India. Okay, that's been a thought that regulators have been thinking for a while. There are tax regulations that prohibit certain things. Today it's not allowed. On ground, you can't have an overseas company listed in India. Gift City allows you something, but Gift City doesn't have the liquidity, doesn't have as many retail investors participate out there. So it's very premature. But if IDR happens, like in the US, if you want to get listed in NASDAQ, you don't have to be a US company to get listed in NASDAQ. You can be an Ireland company, a Singapore company, a Dubai company, getting listed overseas. Indian companies are allowed to do ADRs or GDRs in the foreign exchanges. That's again allowed for Indian companies basis the regulation that we have. If IDRs are allowed, most of the companies that went outside, example like say Grow, they were a US-India structure. They went outside to raise capital, raised a lot of capital, came back, reverse flip, did an IPO in India, great IPO. But when they reverse flip, they paid $200 million in taxes to the US government. If IDR was there, they would have directly got listed. They wouldn't be required to go through the painful process of reverse flipping. Like even a deep tech company, why it's relevant to this topic is because deep tech companies may be global companies. They're not just India headquartered company, they will be global companies because there is a global use case, not just government of India. Imagine a space tech company just rendering services to government of India. It's a very small use case, right? The market and the TAM will be very shrink to that extent. You would want to service to NASA, you would want to service to maybe a France government, an Australian government, all of those governments. So if you want to do that, you need to be a global headquartered company. So to that extent, if ideas are permitted, we will really create a global deep tech company, just like what Elon Musk has done in SpaceX or maybe the other companies that we have today. That's where I think the vision should be. And IDR is a great idea if that can be taken through. I think, Arun, what you need to do also do is have a forum, do a policy representation to the governments as part of venture intelligence in terms of how the VC world and the others are thinking about it. Yeah, I think that's my thought. Any closing comments from any of the panel members? It will be great to hear.
Yeah. I have one comment, and I think great place, great time. I mean, I agree on the global bit, but I think we need to be. It takes time to build these things. We should not be in a hurry. You know, it takes, and it's what I call as a network effect. Like I'll just tell you, like when I set up the first GCC along with 4 others in 1988. We would go around the world, we would actually show where India is on the world map, okay? And we've come a long way. Today, you know, the GCC ecosystem is what, 252 billion, and that has created a network. It takes 20, 25 years. It took China 25, 30 years to build the manufacturing network, okay? So this will take time. I think, you know, trying to have too many first world conditions in a third world country, it really doesn't work as quickly. So I think it's going to take time. And the second thing, we all talked of first principles as a thing. I believe that we talk of more, you know, complex systems, which is, you know, I'm going to integrate, you know, atoms with bits and stuff like that. The phenomenon is not about first principles, it's all about emergence. For example, let's say, you know, just by studying an ant, you don't know how an ant colony behaves, right? Just by studying an individual cell in your body, I don't know how you do it. So Emergence is going to be one of the keys and not just first principles. That's my final take.
Yeah, two comments. First of all, I'm actually very excited about how this government is creating a sense of urgency and has created the excitement, because you know what precedes prize money is a sense of excitement, of recognition. Let's call it recognition. So the fact that in the government, you know, they go after projects of strategic importance and we give it a mission tag, you were part of one, I think is a great sign. We haven't, I mean, I've been working in India for 20 years in private equity. I haven't seen that until recently, right? So that's great, it's worth celebrating. Second, they're putting money where their mouths are. I mean, $11 billion is a lot of money. When we started out 20 years ago, the total private equity venture capital industry was less than 2 billion. So 11 billion is a lot of capital. But the third thing is, and this is where all of us have to take joint responsibility, right from early stage investors all the way to private equity and so on, and corporates. I think we should now encourage innovation. The government has done its part. I mean, we can keep complaining about regulation and ease of doing business and so on. I think they've done a great job. Now it's on us to encourage these startups to scale up and to think commercial from day one, to think about selling from day one, so that by the time, you know, so that we can create these large outcomes that we can then celebrate to then encourage that whole virtuous cycle to take place. Because if we don't have these large outsized outcomes, it's not going to motivate the early stage, you know, startup creation. So, but I'm super excited, part of IDTA, and we hope we'll, as Gaja Capital, make more investments in deep tech.
Concur with the thoughts. I think in India is really at its inflection point in terms of deep tech, and it's been either consumption story traditionally or services story. But I think for a change, we are looking at product innovations and so much more in deep tech, and that's close to my heart as well personally. And this government, again going back to Imran's point as well, it's very exciting to see that we are really building the self-reliance, right, and true to every part of the word and in every context as well. It requires patience for sure. It's a long journey, but I think it requires, going with the same point on ecosystem. I think we need to build this as a holistic ecosystem around ourselves rather than just bits and pieces. And we have a shared responsibility across stages, across sectors, and across asset classes as well. But I think it's an interesting time. Probably our next 2-3 decades will be India's decades for growth.
Yeah, I mean, I would only add that, yes, the ecosystem will take time to build. I mean, if you go back 15 years when the consumer internet revolution started, and, you know, who would have imagined that so many companies, so many tech companies would be listed today. You know, there is a local pool of $60 billion of local savings that is coming into public markets. And now there is a, you know, strong ecosystem of capital, founders. You know, there's a huge market, right? And the same thing will happen in deep tech. I think it's a great start. It's day zero. And yeah, we are very excited.
I will admire 2 points of the government because I criticize some part of it, but 2 things that the government has done well in the last couple of months at least that I could say is startup definition has a definition of deep tech that just got redefined about a month back. The tax benefits otherwise is available for a shorter period. The tag of a startup is generally for 10 years because you get certain benefits, maybe incentives, other things that you have. For deep tech, it is 20 years. So the government realizes that it takes time. There's a mission that at least has started. I believe it will evolve over a period of time. That's one great thing. The other wish list that I was speaking to one of the founders who went to the US in the AI space, he's in the small models. I was asking, what do you expect? He's a young guy, 24, 25. So I was just asking, what is your expectation? What do you expect from a budget in India? So he said a very small thing. He said that I expect government to do something about the compute power that has to be there. And I think the government did it very well. They announced data centers being tax exempt for the next 20 years till 2047, which is great. Again, it's an aspiration that people have to look at. Tata is also investing in data centers. Reliance talking about it. So I think Corporates are also coming forward. So there is a move that is taking place. I think it's a long way to go. Great journey. Happy to be on this panel. Happy to hear all your thoughts. Yeah.
Can I say my
Please.
last word
Please,
to
please,
add
please.
to yours? I think,
Yeah.
I think it's fine to criticize the government. In fact, they need a constructive critique because otherwise there's no closure of the feedback loop, right? So the more active and strong the bottom-up voice is, the more refined is our are the policies. And I have to say that for 4 years, I ceased to be an academic and became a babu. And I was an additional secretary to the government of India. I had never been inside the government of India. And if I were to do one-line summary of what I learned, it would be that I found that there is no active or systematic resistance to good ideas in the government. But there is layers and layers of complexity to navigate. But in startup movement, definitely what's missing is a bottom-up voice. In the regular industrial setting, there is the CII, there is the NASSCOM, there is whatever, FICCI, et cetera, et cetera. What is it in the startup movement? There is a little bit of ISBA-CON, ISBA, et cetera. But we need a lot more of it. So thank you for putting together what you have put together. Yeah.
Okay, so any questions from the audience?
Dr. Anand, 95 AIMS batch. My question is with respect to startups, especially when we talk about deep tech startups or healthcare startups or medical startups, there's a complete lack of awareness of filing global intellectual property, global IPs. What steps are being taken by venture capital funds in India to ensure that intellectual property is implemented not just within India, but for the global markets? The reason I bring this up is because most of the investments that I've done are abroad, and their perception about Indian IP is still weak. The euphorism that I see and the euphoria I see in this panel or in this conference is very different to the euphoria I get to hear about India outside, especially when it comes to deep tech. So that's my first question. The second question is, Mohandas Pai, a dear friend of mine, still is very wary about angel tax. And while angel tax has been abolished or it has been taken back, what steps are being taken by the government of India to ensure that wherever the angel tax has been implemented prior to 2016, that money has been refunded back? Thank you very much.
So the first part is about what are the VCs doing that I led. I think maybe we should start there.
I'll start with the awareness that's being created, right? That's at least, I see a bunch of VCs, including us as well, having set the ball rolling at least. So a lot of IP that, for example, I firmly believe that academia is at the heart of deep tech, and a lot of our initial deal flow at least comes from academic institutions. And when the IP or at least the technology is being built, science is being at least validated in the academic institutions, moves on to become a technology or validation technology. A lot of IP definition is around the local ecosystem for a specific use case itself. When we engage with these research teams, we actively encourage them to think of filing an IP around that, around that research itself. One of the things that we are actively trying to do is, thanks to our legal counsels, is do a very active freedom to operate search, not just within the local use case, but across industries, across sectors, and as well look at a global sense itself. They might not go ahead and file in jurisdictions out of India to start with from a purely for a commercial reasons, because these are young startups. The amount of funding that they have is very focused on product development rather than, let's say, looking at the legal documentation. But the effort to look at that freedom to operate analysis from a very holistic manner is changing now. and we see that more often becoming a part of our conversations on IP diligence than what it was, let's say, a few years ago. So that's very heartening to see. And this awareness is building in research institutions also at a lab level. So when they, and most of these, let's say, at least representative, if not entire universal set, as IITs and ISCs, and because they interact with some of VCs of our stage, they some of these research labs, which are headed by professors, have this in cognizance, saying that this is a stage that we have to cross when we get to a potential funding scenario for some of these teams. So that's sort of my take on the IP part itself. But
and I think just to build on, I think some of the institutes have that structure where they advise some of the companies as to how to file the patents and navigate. From a pavestone perspective, we don't do too much of life sciences, so not really addressing a question, but Fund 2, we intend to do life sciences. One of the things we intend to do is, we have a partner in the US who is actually a life sciences person who has taken an exit and who knows how to navigate the space. So our thesis is going to be, whenever fund companies come in this space, we will connect them to him to enable them to navigate that space. So.
Yeah, I mean, you know, at the growth stage, especially in deep tech, because you don't have a lot of revenues to go by, I mean, eventually the evaluation is about the patent library. And obviously we give a higher value to an awarded US patent as opposed to an Indian patent for reasons that you mentioned. So yes, we look for those that hard evidence, and yeah, we will unlikely invest in a company that has no evidence of innovation, patent awards in the US being the most, the highest evidence, research papers, of course. But also I must keep bringing us back, at least from our perspective, back to this commercial question, that innovation by itself is valuable, but if it meets the market, that is where the real money is. So at least from our standpoint, we're looking for evidence that customer value gets delivered.
Yeah, on the second question on the angel tax.
Just one a small addition, I missed this point. Probably the reason why you might not see this euphoria for India outside is probably one of the reasons where the US ecosystem is ahead of India, and we need to formalize this as an active technology transfer system between academic institutions and in the industry. We have to formalize this in the Indian ecosystem, and hopefully that will give a little more confidence for the West on what's happening in India. You had it.
You were making a point on the angel tax. Yeah, please. You can say something. I'll go last. You can go first.
Okay. Well, I have to first say that on the angel tax, the status, I don't know anything about it. So you can talk about it. But I think on the first question, I very much agree with you that outside, when it comes to investors whose opportunity set is global, they're hesitant to bring their investment to India. Often, the first, so far in the last year that I went back to Boston, I've been speaking to many, I realized that we haven't, India that is, hasn't really focused on building a global brand for its startup ecosystem. Deep tech is only starting now. But even in the best of the places, the understanding about what's happening in India is kind of negligible in this space. So we really have to push for that. And then there may be genuine concerns that, you know, it's easier to invest in some other place than here, and we will have to address those concerns. Now, what you said brought to mind two things that I would take as action items for me, and maybe if you're willing, for you too. One is Controller General of Patent is in Mumbai. We should add international patent as or patent search, evaluation, etc., as a module in their work, because they are the one they're teaching the entire ecosystem, getting tools for them. Second is, when at Niti Aayog, we built this thing with ICMR and CDSCO and others, AIMS, etc., called the MedTech Mitra. You may have seen it. The realization was that the last mile is a black box for medtech startups. Which certification do you need? What do you have to prove? When will you be approved for public procurement? All of that. We built that last mile help desk. That has helped quite a bit. But that last mile help desk currently doesn't tell them that, oh, what are you doing to go global? Because we were so focused on just getting them to the Indian market. But I think it should do that. I will take that as the action item.
The reason I brought it up is because I have 23 exits in biotech and medtech. All my exits have happened from the US and Europe, not from India. I'm not sure how the Indian VCs are getting exits because the biotech, medtech, deep tech companies take a long time to go public. So the retail investor in India is not mature or not sophisticated or beginning to understand deep tech. So obviously the only other way is for a US or a European company to acquire an Indian company, which is quite possible only if the IP is global. So it is of paramount importance that VCs in India have to impress on setting up an IP fund to co-invest in opportunities where there is a strong intellectual property focus. Because otherwise I don't see an exit coming. An exit will only come through a secondary buyback. One VC selling to another VC. But what about the ultimate exit of an M&A? I think it is of paramount importance. And I don't think the government departments, in my limited interaction with them, understand the urgency, especially when their geopolitical relationships are changing and extremely volatile. So this is of paramount importance, I think. Please kindly bring it up with the government in whatever fashion it is possible.
I think that's very astute what you're saying. And you're right, that conversation you do not hear in the hallways. And I think the point you're making has a bigger point behind it, which is that the deep tech, as soon as you think about the global deep tech interaction within the government, it becomes a question of that sectoral ministry and the Ministry of External Affairs. Because external affairs is what drives the international relations agenda, and the sectoral ministry drives the sectoral markets and its globalization and so on. And that is a structural conversation that we have to induce, right? Yeah.
I won't take too much of time. I think there are other people also. So, but then I got a few other points to discuss later.
Yeah, so the angel tax, I'll just spend 1 minute, just 1 minute on the angel tax.
I just have a question for Imran. Loved your clarity of thought on many aspects that you spoke about. I indeed took a video of one of it. Here's a larger question where their RDI is focused on investments in data centers. My question is, if the resources of our country, which is also strained for land, electricity, water, etc., which is what a data center requires, then isn't it like what we did earlier with our people as a resource, now using our natural resources for doing data centers where the value of AI is being captured outside India?
Yeah, it feels like that, but you know, in fact, I've been meeting a few data center companies myself, and there's a lot of action there. We are so far behind, you know, US and China on just core compute that the government and also the private sector is rightly, I think, prioritizing catching up. We may never actually catch up because they are just so far ahead. Just to give you a sense, I met one of the leading data center companies in India, and I asked them, how many GPUs do you have, which is kind of the core unit of compute. And they gave me a number in the thousands, like 14,000, 15,000 GPUs. In a country like of the scale and size of ours, and we just had a global AI summit in Delhi, that was shockingly low. And so I don't know if I'm answering your question directly, except to say that we are so far behind the rest of the world that we'll at least have to have a base level of compute in order to compete globally in this wave of AI, which is seemingly very real. Now, the question you're asking is that what's the impact on the environment, what's the impact on power. I mean, a big factor in data center is, power consumption. These are power guzzlers that has, huge environmental, implications. And some of the more forward-looking countries are investing in nuclear. Nuclear has its own issues, but it's perhaps the cleanest solution to solve the compute problem, the power problem for data centers. So I hope that eventually, I don't have a line of sight into how the government and how policymakers are thinking about solving this or resolving this, but I hope that we eventually, get to a point where we use clean energy and build that data center capacity that we badly need because we're so far behind, but do it in a responsible way. That's my hope, but I don't know whether that will happen or not.
Hi, good afternoon. Hi, here, sorry, extreme left. Yeah, thank you so much for the insightful discussion. I just have got two questions, particularly for Mr. Imran and Mr. Lakshmikant. By the way, I'm also Lakshmikant, Yajur Partners. So you mentioned about prized money, right? And I assume it is about the capital investors are putting out for deep tech. So just want to understand, what does it take to build that confidence amongst the investor community to be able to put that capital out in deep tech space today in India? That's one question. Second question, you spoke about the earlier exodus of founders wanting to move to cities like Mumbai, Bangalore, Hyderabad to set up their ventures because capital was available there. But now, of course, post-COVID, we are seeing that there is sprouting of a lot of startups happening in tier 2, tier 3 cities. And I have been interacting with a lot of founders who are developing their ventures in those cities, being there. How do you currently do discovery of those startups? Because while the development is happening, they're also struggling to get acknowledged or recognized or get identified by investors. So today, how are you doing discovery of these startups who are coming up in tier 2, tier 3 cities? Yeah, just on the lighter note, Imran, you mentioned the first principle thinking of how in US, children are taught to earn money from a younger age. I think I partially agree, because in India, for a larger mass, they don't need to be taught to earn from a younger age. They are, by design, forced to earn from a younger age. Right? That's why today we have behemoths like Adani's and Reliance and Vedanta, who actually came up because they were forced to earn from a younger age. So yeah, just on lighter end. Thank you.
Sure. No, they're of course great examples, and you shared a few. I didn't mean that disrespectfully, but very quickly to answer your sorry, I'm blanking out a little on the two questions. Can you just quickly just remind me?
So, one was on the discovery of startups which are coming up in tier 2, tier 3.
And the first is prize money.
And the confidence building amongst the investors to put money on deep tech.
Yes, so I'm glad you asked the prize money question. I did not mean investor capital. That's not prize money. That's raw material to create the prize money. And so what I meant by prize money is a recurring stream of earnings growth and return on capital employed. That's what I meant by prize cap, because that's a derivative. So the real prize money in deep tech needs to be that you add such surplus customer value that customers willingly give you a recurring stream of earnings for a long period of time, and you're able to demonstrate to your investors a healthy return on capital employed. That will then give you the market cap and the outsized outcomes that will then create the virtuous cycle of startups and early stage investors and growth investors coming in to invest in more deep tech. So that's the first perspective. On the tier 2, tier 3, I have a bit of a difference of opinion. I grew up in a small town called Lucknow. So it's, again, this is not about, this is not about being patriotic or not about small town India. There's a lot of cool things happening there. I was invited, in fact, by, the government to speak in a similar conference in Srinagar. And, we put together a panel to encourage entrepreneurs. But my advice to all of them actually was, if you want to do something in technology, in deep tech and software, move. You're part of India. India and ecosystems are a big determinant of success. So don't be afraid to move. If you're a young professional with an engineering degree in Srinagar, and you want to create a software startup, Bangalore is probably your best bet. So I have a little, I don't want, you know, I feel that we should not be telling our young, and put even more constraints on young people for patriotic or other reasons, to deny them the opportunity to improve the odds of success. We should in fact encourage professional people mobility within India. In fact, I would argue we should encourage international mobility. Chintan's a great example of that, you know. So, in fact, I mean, there's another great thing that the government, they got you from there to help us, advise us for 2 years. So I think this cross-pollination of ideas and people is a great thing for capitalism, and India needs that.
To add, I think I totally agree. You know, it's very important to be in place where the action is. For example, in Bangalore, you can go to a coffee shop and get things done. I mean, you don't really have to, you know. So I think, but, you know, work from home is definitely helping. You talked of Lucknow, matter of, we're just talking to a company based out of Lucknow. So things are happening, and they reach out. Nowadays, because of the fact of social media and people's ability to find out who's doing what, people do reach out. So it's not that issue, but I agree with Imran's comment. Secondly, to your thing, how do you attract deep tech investors? Very important to set the right expectations right at the beginning, in the sense that we tell all our investors that it's going to be capital intensive, it's going to take time. In many ways, we tell them, don't talk to us for the next 7 years. Okay, I know it's not, I mean, in the sense, obviously we do keep them updated, but we set that expectation. And one of the reasons why it's very important to get mature investors, especially family offices, people who have seen business cycles, is they know that these things take time. But if you get to a retail, very retail heavy kind of table, then it's a very different discussion, because every time something goes up and down, you're spending a lot of time on that. So I think deep tech investing is not meant for everybody, and very important as a VC to make sure that you get right investors and set expectations. So.
Any more questions?
I think, yeah.
Yeah. So, so it was not a retrospective amendment, it's a prospective one. So there are no refunds for the past cases. All the litigations that are going on, it's in pipeline. Their positive news is that the jurisprudence over the period, judgments at tribunal or high court level, which are in favor of the SSE. So one can take relief from that if you have a valuation report that justifies the valuation that you've done, even if the department, most of the cases the department has challenged the valuation report itself and has put some other value, arbitrary, notional or something. There are good judgments that are there, but you'll have to do the legal cost pending. You'll have to appoint somebody to represent you at the high court or the tribunal level to defend yourself. That's the unfortunate on ground. Most of the retrospective amendments that happen, it's generally in favor of the department. Very few are in favor of the SSE where there are retrospective amendments. This was a prospective one, not a retrospective one. So it got abolished in 2024 of September. So only after that, there are no cases, but anything which is prior to that, the cases are going on. Nothing happens. It does. It's a cost of compliance out here. And I'll tell you one statistics, one very used statistics, I'll give it to you. There is an OECD report on litigations globally. Okay. They represented how many litigations at a higher court level does a tax department win and the taxpayers win. India was 65% cases the tax department loses the case. It's only 35% cases there's a likelihood of department winning the case or going in favor of the income tax. That is it. So I think you are amongst the 65% of the cases that you'll win the case. At best, you'll have to spend the legal cost. Your financial statements will have a disclosure that there is a litigation that is going on for the past period. Every investor diligence, you'll have to disclose it. That's it. I think that's part of the game. But high enough chances that you'll win the case.
Thank you so much. That was really insightful. So I'll request the panel to please come forward for a group photograph. Meanwhile, we are also set for the lunch break, but we request you all to please be back for the Growth Capital and Focus panel by 2:30 p.m. So requesting the audience to be back inside by 2:30. Thank you. Please come forward.